Again, I thank you guys for joining me on this webinar today. It's in conjunction with the City of Riviera's Beaches CRA. And today we're going to talk about PPP and more specifically, the forgiveness process for the PPP loan that was received. We'll talk about the forgiveness process, what expenses are covered, what's considered non-covered, best practices for tracking expenses, and best practices for recording this all in your accounting software. I will ask that you hold questions to the end of the webinar. We will have a brief Q&A session at the end. And also, when we get to that Q&A session, you can either ask the question through video, or you can type the question in your chat box. And I also receive questions ahead of time through your email registration. And one last thing. So when I sent out a reminder for today's meeting, I mistakenly sent the reminder that was for me. So a lot of you are showing up as Audra Wilson today. If you could rename yourself, if not a big deal. Okay, briefly touched on this, the agenda. I'll tell you a little bit about who I am, and we'll review small business loans other than the PPP, and then we'll dive right into the overview of the PPP, the forgiveness, again, the covered expenses, are they tax deductible, documentation that you'll need for the forgiveness process, and again, best practices for tracking all of this in Excel as well as your accounting software. And then I'll provide you with additional resources and links to resources aside from PPP. And again, we'll have that Q&A. Well, you'll have an opportunity to ask your specific questions about PPP and the forgiveness of it. Okay, my name is Audra Wilson Russell. I am a certified public accountant here in the state of Florida, as well as I hold a master's degree from Lanier University. I created WATS CPA firm in October of 2012, and I am a certified QuickBooks Online Pro Advisor, as well as a certified online advisor for Xero Accounting, which is a competitor of QuickBooks. Okay, so one of the main loan programs that you guys may already know of is the SBA Economic Injury Disaster Loan, or the EIDL loan as we call it in short. This loan right now is closed, but it is open for agricultural businesses only. This is the website to apply, the criteria: 500 or less employees, nonprofits, small businesses, sole proprietors, independent contractors were all able to apply for this loan. It was up to $2 million for a 30-year time frame. And I'm just kind of blowing through this and giving you the overview. We actually covered this in more detail on the last webinar, which I do have a link on my YouTube channel, and I'll send you that as well so you can access the webinar from last time. Interest rate on that was 3.75 for for-profit and 2.75 for nonprofits. As part of that EIDL loan, there's the emergency grant. So you guys may have heard of this, up to $10,000, where kind of midway between the grant, they changed it from the up to 10,000 or the 10,000 grant to 1,000 per employee. So if you have 4 employees, then you can get up to $4,000 on that emergency loan. So instead of waiting for the entire economic injury disaster loan to be funded, they would advance you up to $10,000. That $10,000 does not have to be repaid. And if you do get the advance as well as a PPP loan, then your PPP loan that's forgiven will be reduced by the amount of the advance, which pretty much means you'll have to pay back the advance. through the PPP, but at a lower percentage than the 3.75. A new program that's being announced soon is the Florida Microfinance Guarantee Program. I have a link here. I'll be sending this out with the notes to the webinar as well. And fairly new program still being fleshed out, who's eligible entrepreneurs and small businesses with 25 or fewer employees and gross revenues of 1.5 million or less over the last 2 years. So if you did not have an opportunity to get funded in any of these programs, then I would definitely recommend that you head over to that website and check out this program to see if it's something for you. Okay, jumping into PPP. Small businesses with 500 or fewer employees, nonprofits were eligible, sole proprietors, independent contractors. This loan amount is up to $10 million or 2.5 times your monthly payroll, whichever was less, and paid back over 2 years at 1%. Payments start in 6 months, or you can ask for another 6-month extension. So anywhere from 6 to 12 months is when you will have to begin paying back the PPP loan. PPP loan is for specific uses, and I'm sure by now you've probably all heard: payroll, mortgage interest on any real or personal property, rent under a lease agreement, and utilities. And we'll dive deeper into all 4 of those categories there. So you cannot use the PPP loan for the same purpose as the SBA disaster loan. So if you apply for the disaster loan and intend to use that for payroll purposes, or let me rephrase that. If you take the PPP loan that's specifically for payroll and these other things, you won't be able to use the SBA disaster loan on these categories of expenses, because then that would be double dipping. Okay, so for loan forgiveness, if you are a PPP recipient, you will submit an application for forgiveness to your lender 8 weeks after receiving the funds. So your 8 weeks starts the day that the funds hit your bank account. You get paid today, then you're going to start counting 8 weeks from today as when you need to spend those funds for it to count. Once you submit your application, your lender will determine your forgiveness eligibility. So more important than anything, you need to be in contact and communication with your lender to see what their specific eligibility requirements are, and also what their specific documentation is. Once you submit your application for forgiveness, your lender will have 60 days to accept or deny. So it's not an automatic forgiveness. There is an actual approval process. There's an acceptance and a denial of forgiveness. This loan is not taxable income. Right now, it's a loan, but when it is forgiven, you're going to move that off of your books as a loan to income, and we'll talk about how you'll do that. But just remember that this money is not taxable income. So be very careful when you are preparing your 2020 tax returns that you don't pick up that deposit for this loan as income when preparing your taxes. Okay, this one was a doozy. No deduction is allowed under the Internal Revenue Code for an expense that is otherwise deductible. So expenses like your payroll, your rent, your mortgage. If the payment of the expenses results in forgiveness of a covered loan pursuant to Section 1106B of the CARES Act. So what they're saying here is if your PP loan is forgiven, any expenses that you paid with that PPP loan is not deductible for tax purposes. So you won't get the deduction for the wages. You won't get the deduction for the rent. This could change because there are some tax advocate groups like the AICPA, which I'm a member of, who is fighting for this on behalf of small businesses for them to be able to deduct their expenses as normal. But as it stands today, if your loan is forgiven, any expenses that you paid with that forgivable portion is not deductible on your tax return. All right, so let's jump into the 4 different categories of covered expenses for PPP loan. First is payroll. What's considered payroll? It's compensation to employees, including salary, wages, commissions, or any other similar compensation, bonuses as well. Cash tips or equivalent. If you have to pay an employee leave, allowance for separation or dismissal, employee benefits, group health care coverage, their insurance premiums, retirement contributions, and state and local taxes assessed on their wages. All of this falls within that payroll bucket. Now, what you will notice that's not on there is federal withholding. So you will not include any federal taxes, Social Security taxes, or Medicare taxes. That stuff, when you run your payroll reports, you're not to include those figures as part of what's being covered by the PPP loan. For mortgage interest on real property or personal property, it has to be for an agreement or mortgage that was in effect as of February 15, 2020. Okay, and same for rent. Your rent or lease agreement needed to be in effect as of 12/15/2020 in order for those expenses to be covered. Utilities includes payments such as electricity, gas, water, transportation, telephone, or internet, and service must have been established prior to 2/15/2020. So what happens if you're self-employed? The amount of your payroll portion or your owner's compensation is pretty much your net profit on your Schedule C multiplied by 8 divided by 2. So I'm sorry, 52. So there's 52 weeks in a year, and we're looking at this 8-week period. So if you take that ratio, which is the 0.154, you're going to multiply that by your 2019 net profit on your Schedule C, and that's line 31 on your Schedule C. That's going to be the portion of the PPP that's considered payroll. The remaining amount is eligible for utilities, rent, and mortgage expense. One thing to be very careful with when it comes to Schedule Cs is that these type of expenses must have been deducted on your 2019 tax return in order for them to be eligible. So if you did not have any utilities or rent or mortgage interest on your 2019 Schedule C, then you will not be able to use those as eligible expenses during the forgiveness process. More than likely, if you are a Schedule C, you may have money left over or expenses or money that doesn't cover the covered expenses here. And so what'll end up happening is it'll be a loan, pretty much a loan on your books that you'll need to pay back. Talking documentation here. Okay, so At the very least, this is what you need. But again, you want to make sure that you're in communications with your bank because they may have their own specific criteria as to the documentation that you need and the entire application process and how things go. But at the very least, have your payroll tax reports. So if you're working with someone or a company like ADP, Gusto, Benefits Mall, Paychecks, they all provide you online access to run your reports. And some are even creating new reports that are specific to the PPP loan process, where they're creating new reports that will help you in the forgiveness process as well as the application process in calculating your payroll figures. So also reach out to your payroll providers to see what customized reports that they do have specific to PPP, and that'll help you on the back end a bunch. Get your group healthcare benefits for any group policies that you're paying on behalf of your client, your employees, and any retirement benefit plans as well. And any other documentation may include things like canceled checks, receipts, account statements, lease payments, utility payments, mortgage interest. The banks may want to see an actual lease agreement, that kind of stuff. So just make sure you gather as much as you can, even if the bank may not ask for it, at least you have it together and ready to apply for forgiveness. If you are a sole proprietor, independent contractor, or self-employed, then pretty much what you need is your 2019 Schedule C. But if you have employees in your Schedule C, then you're going to want to gather all of these documents as well. So all of your payroll reports, group health, retirement, all of that stuff when it comes to your employees. The only thing that you're not going to include is your own retirement benefits and your own insurance premiums when it comes to self-employed individuals. Okay. Yep. So that's pretty much the same thing. Just, yep. So there is a reduction in the forgiveness amount if you have more than 25% of your total salary or wages for employees is reduced. So we're talking a lot about the full-time equivalents. I'll just read this here. It says forgiveness is reduced for any decrease in the number of full-time equivalent employees by comparing the average number of monthly full-time employees during the 8-week period. So starting from when you receive your money now through your 8 weeks, you're going to calculate by month how many full-time equivalent employees you have. A full-time equivalent could be 2 part-time people to equal 1 full-time equivalent based on the number of hours. So if we're talking a 40-hour work week and you have 2 people doing 20 hours, that's really considered 1 full-time person. So you're going to calculate that number each month and then come up with an average of what the monthly full-time equivalent is. And then you are going to compare that number to one of the 2 periods listed below. It has to be for the same period, well, not the same period, from February 15th through June 30th of last year, or from January 1st this year through February 22nd. So the SBA does recognize that there are businesses who are seasonal, and so your peak time could be now as opposed to the February 15th through June 30th last year. Your peak time could be now. So get with your bank to see which one of those you could use for forgiveness. But you're going to compare your full-time employees through the 8-week periods of you spending the money compared to one of those time frames. And if the salary or number of employees was reduced by that more than 25%, then your forgiveness part is going to be dinged by a ratio of whatever's in excess of 25%. So if it was reduced by 35%, then what's in excess is 10%, then your forgiveness amount would be reduced by 10%. Hopefully that's clear. Okay, you won't be penalized for any reduction occurring between February 15th through April 26th if the reduction is eliminated by June 30th. So what that means is you have to bring your employees back. If you bring those employees back by June 30th, then they're saying that, you know, it won't ding you for the reduction. Independent contractors are not employees, and they're not to be included in the calculation of payroll cost. So if you did apply for a PPP loan and you use your independent contractors as a factor in calculating that loan amount, you may want to contact your bank ASAP and let them know that you had an error in calculating your loan amount, because the guidance is very clear that independent contractors are not considered employees and therefore not payroll cost. And many national payroll providers, I think I've said this, have developed PPP compliance reports to track both payroll and benefits. So reach out to your payroll providers to see what reports they have available for you to make this easier for both you, the bank, and your accountant. Now, this was an example of what we did in the last webinar, where we actually went through an application or a mock application and applied for a loan. So based on that mock application, their average monthly payroll was $11,350. So their total EIDL loan was, I'm sorry, not EIDL loan, PPP loan was $28,375. So now we're going to get into the tracking portion based on this $28,000 loan. So this is a good example of how you would track the loan, right? This is an Excel template, got the name of the bank, the account number, the amount, and the loan date. I put the loan date there so that your 8-week expiration date automatically calculates. It's pretty much 56 days. So if you get it today, you're going to count 56 days from today. That's 8 weeks times 7 days per week, right? 56 days. And so in this scenario, the client got the $28,000 and their loan date was on the 1st. And so they started spending money as soon as they got the loan. Right here are the dates that it's listed, the types of expenses, and then a memo. Definitely complete that memo so you have it when you are applying for forgiveness. In this particular example, they paid a portion of their rent. They paid their payroll, that included their benefits, their state unemployment taxes, but not federal taxes. So do not put the amount of federal taxes here. And then a portion of their light bill, water bill, internet. And then, you know, that just repeats with the payroll in 2 more weeks, and then the rent and the utilities the next month. So in this example, you'll see that the rent amount is fairly reduced, and then whatever's left over in payroll was the remainder, right? So once you add all of that stuff up, if payroll is at least 75% of the total expenses, you're in good shape, because in order for the loan to be forgiven, you cannot use more than 25% on rent, utilities, and mortgage interest. So that leaves at least 75% for payroll. So I would say shoot even higher than the 75% to give yourself some wiggle room there. So in this case, 79% was used on payroll, 19.4 on rent, and 1.6 on utilities. That's a good example. A bad example would be where you're paying the entire loan amount, and the entire utility bills kind of like early on, and then leaving whatever's remaining for payroll. And in this situation, payroll is coming in at less than 70%. You don't want to be in that type of situation. So plan it out before you spend it. I would recommend that you take time to have in your mind what it looks like. So pretty much a cash flow forecast for the loans themselves. And as far as the federal taxes, the employer portion and the employee portion of Medicare, Social Security, and then the employee federal income tax withholding were not included in these calculations. All right, so now how do you do all of this in your accounting software? If you received the PPP loan and you needed to create a new bank account, then this is the process that I'm recommending that you follow. First, create a new long-term liability, and you can name it what you want. In my example, I named it PPP Loan. So you're going to create a new chart of account with the name PPP Loan and set it up. The most important thing here is to set it up as a long-term liability. And then you're also going to create a new vendor. So depending on which bank you received it from, in my example, it's my community bank, then I would create a new vendor called my community bank. And then you are going to connect your bank account in your chart of accounts. You're going to create a new bank account within QuickBooks Online, and that new bank account could be my community bank checking, or if you're with BOA or Bank of America, well, that's the same company. You can say Bank of America PPP loan account, however you want to name it, but it has to be a new chart of account as a bank account setup. And then you're going to pay all of your expenses related to PPP loan from this new bank account that you just set up. And you would pay those expenses how you would normally pay any expenses, whether it be a bill, an expense, a credit card expense, or a check, however you write them normally. You would just select the My Community Bank Checking as the bank that it's coming from. And then also, when you see the funds being deposited into the bank account and you're categorizing it from the bank feeds, you're going to select the new PPP loan long-term liability account that you just created and code it there with the vendor My Community Bank. And you can make a note if you want to, PPP loan deposit, initial deposit, or whatever will help you. So that's the process if you have a new bank account. If your bank deposited the funds into an existing bank account, then what will need to happen is the only thing that would change is you won't set up the new bank account in QuickBooks Online. You'll just pay your expenses, like I said, as normal, but definitely put in the memo that it's related to PPP, so that when you do go run your profit and loss statement, you'll see what loans are specific to the PPP loan versus all of your other expenses that are kind of, I don't want to use the word commingled, but jumbled together with all of your other expenses, which in my opinion, if you are using an existing bank, then I would highly encourage the use of an Excel spreadsheet to track all of this outside of your accounting software. But all the process is still the same. Okay, so now that's prior to being forgiven. Right now, it's on your books as a liability that has to be paid back. We created that long-term liability PPP loan. So now you've applied for forgiveness and the bank has forgiven the loan. Now what? What you're going to do is you're going to create another chart of account and you're going to name this one non-taxable PPP loan income. And I highly stress you put non-taxable on front of this new chart of account so that when you do run your profit and loss statement for 2020, that it's kind of like aha, yeah, that's right, it's not taxable. So I'm not going to include it as a taxable amount on my tax return. And put it as other income. That's more of an accounting thing than anything. It just shows up on the bottom of the profit and loss statement as opposed to the top with all your normal lines of revenue and services and all of that stuff. So as an other income account, name it non-taxable PPP loan income. So what you're going to do once you create that new account, you're now going to move the portion that was forgiven from your liability to income. And to do that, you would do a journal entry. Just what I would recommend is just moving it all in one bucket, one number. So let's say in that $28,000 scenario, 15,000 of that was forgiven. Then you're going to move $15,000 of that loan into the new loan income account. So now you're just left with the remaining balance of what you have to pay the bank back, and that remains on your balance sheet until it's paid in full. And I think that's what the bottom here says. The remaining amount of PPP loan that is not forgiven will remain on your balance sheet as a liability until it's paid off. And it will continue to accrue interest at 1%. Okay, so this is during the payback. So now you're left with this small loan on your balance sheet, and now you have to pay it back. So when you pay it back, you're not going to apply the entire payment to reduce the loan because there's some interest associated with it. So like with any other loan that you ever have, if you have any loans right now, or if you have a mortgage that you're paying, there's always the principal portion and the interest portion. So when you are making those payments, however you do your internal books, if you are creating bills, or if you do a check or an expense or a journal entry, this is how it needs to be broken up. You would have to apply the principal portion to reduce the loan, and then record the interest, and then the total amount of the payment is what you would see being credited from the bank. Went too far. Okay, so Gusto Payroll has created this massive spreadsheet, this massive online spreadsheet of additional relief options. So if you're not able to secure any of the PPP funds, any of the SBA disaster loan funds, there are a lot of other companies, private companies, that are offering different relief opportunities. So I would advise you to check that out and see if any of that stuff applies to you. And then here are the resource links that I'll be sending out with the PowerPoint presentation. Like I mentioned, there's a link here to my prior YouTube videos on the subject, as well as other tax and accounting updates there. There's the link for the EIDL loan, although it's closed except for agricultural businesses. If you are still in need of finding a lender, there is a link here where you can input your zip code and find banks that are participating in the program. I will say that I see my clients have more success with smaller community banks. So the big guys are letting them down right now. And the champions in all of this are the credit unions and the community banks. Here's a link to the latest FAQs where you can just go through and comb through and look at all the question and answers to see if what we don't answer here for you today, if you can find the answer there. And then also that new loan program that's coming up through the Florida Department of Economic Opportunity, DEO, and also the link to the unemployment website for the state of Florida as well. And if you are looking for a payroll provider, I am a partner with Gusto Payroll, and that's my kind of my personal referral link for anyone who wants to migrate over their payroll to Gusto Payroll. Okay, so about WATS CPA, I'm a virtual accounting firm. I offer outsourced CFO advisory services, accounting and tax preparation, primarily for childcare providers, and I'm very passionate about helping my clients reach their business goals. And again, these are the services that I offer: the advisory, budgeting, cash flow forecasting, accounting, tax, all this stuff, online bill pay, access to payroll, yada, yada, yada. And you can find me pretty much on any social media platform except TikTok. I'm not TikToking just yet. LinkedIn, Facebook, YouTube, Twitter, Instagram. And right now we'll do the Q&A session. So if you can unmute yourself. What I do is I'll go through the questions that I received through email first, and then I'll go through the questions that are in the chat. And then once I'm done with the chat, I'll take live questions. Does that sound fair?
Yeah.
Okay. All right. So let's look at my first question here online. All right. So one question that's been nagging me is there a prescribed way to count full-time equivalent employees for the current period? The staffing situation is so dynamic that it's possible to get different equivalent FTEs for different staffing, just depending on the calculation. So yes, there is like a method to calculating your full-time equivalents. Like I mentioned, if you have 2 part-time employees pretty much doing the same hours as one full-time employee would, then that would be considered one full-time equivalent FTE. So you just kind of have to take it month by month and manually calculate how many employees you have, how many hours each of those employees are doing, and coming up with that FTE by month. If that's something that you need assistance with, give us a shout. All right. And so my next question is, for self-employment individuals who receive a PPP loan, what type of documentation do they need to provide for forgiveness? And that documentation is going to be your 2019 LC, as well as any payroll documents if you do have employees. For organizations that have received funds but are still restricted from opening, can they get an extension of the 8-week period, or will their period be extended? There is no extension. You would have to spend that money within the 8 weeks. And what I was told by an SBA person on a live webinar is, my question was, do I get this loan and pay these employees to sit at home if my business isn't open and operational? And his response was yes. That's pretty much the purpose of it, is to have them come off of unemployment and paid through PPP. Be in contact with your accountants, because it could make sense to not take the PPP loan based on your financial situation. If your employees are covered with unemployment, does it make sense financially for you to bring them off of unemployment, pay them with PPP, and then who knows if they have to go back on unemployment based on how long we're in this situation. So definitely have that conversation with your accountant. Okay, my next question is, all right, that was just more of a comment. I was granted a PPP based on 2.5 times my monthly income as a sole proprietor. So the calculation was about $4,500 per month. And they want to know, if I pay myself this $4,500 for 2 months and have my bookkeeper recorded as owner draw, will that qualify? So that's not quite the way that it works for self-employed people. You would continue to do your accounting the same way that you do it. So if you do take any draws out of the company, you are going to record it as a distribution. But for purposes of forgiveness, the bank is going to want to see your 2019 Schedule C to do that kind of prepackaged calculation where we did the 8 divided by 52 times your net profit from 2019. All right, we have payroll checks from February and March that were not cashed. Can we use PPP proceeds to cash them and count them towards forgiveness? I'm going to say probably not, because the SBA and the banks are going to be looking at expenses that were incurred from the date you received it and then 8 weeks from that. So if you ran that payroll prior to all of this happening or prior to you receiving the loans, I don't think they'll let you retroactively count that payroll, even though your employees haven't cashed the check yet. So if I run payroll and I can show that I incurred that expense, it's not really my fault that my employee hasn't cashed that check. I'm still going to count that expense towards my PPP loan forgiveness for that period. So with that being said, I don't think your employees who haven't cashed their checks before you got the loan would count as part of that payroll incurred within that 8-week period. But check with your bank. Okay, I did that one. Let's see. How many times can a person request a PPP loan from a different bank if you have different banks that service your business or personal? And what can I do to receive a large amount of support of income from PPP if I was only approved X amount? So you can only have one PPP loan. So if you applied at various banks because your original bank wasn't responding, and so you applied at multiple banks, and now all of a sudden with the second wave, your original bank, ta-da, you have money. You will have to reach out to one of those banks to return one of those loans. So you can only do one PPP loan. And so that second part of the question, what can I do to receive a higher amount? It's pretty much a set amount based on your average monthly payroll. So if your average monthly payroll from 2019 didn't change between now and the time you applied, then that's what you're capped out at 25 and a half times your average monthly payroll. Okay, went over that one. Let's see what this one is. I'm an independent contractor, and I currently don't have my 2019 Schedule C prepared to submit to a lender. Is there any documentation that they will accept? Can I do an estimate on the form, and does it have to be 100% accurate? The banks are allowing you to do a drafted Schedule C. I would say make it as accurate as possible, and contact the bank to see what other documentation you may need in addition to that draft, because some banks are wanting to see if you receive 1099s, if you have any invoices, all of that stuff. So reach out to your bank, but they definitely are accepting drafted Schedule Cs with your best estimate of your 2019. Okay, so now I'm going to go to the chat questions. Employees, I think I addressed that one. Is this like the $1,200 a month stimulus? It was deposited the same day of my PPP credit for the Small Business Administration. No, so this is different from the $1,200. The $1,200 is for personal, or it's not business related. It's all on the individual side and for, us as like our personal taxes. This isn't related to the business PPP that we're talking about. Is it true that I have to spend the full amount of my PPP in 8 weeks? If you don't spend the full amount, then whatever's remaining, you would just pay back as a loan. But that is the idea, is whatever expenses you incur between the date of receiving it and the 8 weeks are the only expenses considered for coverage. Do retirement benefits count towards the 75% payroll cost or 25% of the other? Retirement benefits are a payroll cost. Okay, if you got money, but they were paid after you got money, but the days paid for the pay period were prior to the date of the payroll that was processed. I think I'm going to need more information on that. Did you run payroll after the 8 weeks, or did you run payroll prior to? If you ran payroll after the 8 weeks, then I believe it'll be based on the after. And when I say after 8 weeks, I mean after the deposit. Okay, we need to use PPP loans for eligible expenses 8 weeks exactly from the date of the PPP funds received. Okay, so if it's in the middle of a pay week, we will need to calculate the partial week divided by the day. I don't think so. So what I think is it's going to be cash out the door. So even if you are an accrual basis taxpayer, from my understanding of the guidance, is it's not going to be based off of what was accrued, but what was actually paid. But again, contact your bank for clarification. Can PPP funds be used to back pay to employees for unpaid prior to receiving, or do the payments need to start the date of disbursement? So that's going to depend on if your employees were receiving unemployment. If your employees were receiving unemployment, then you do not want to provide them with back pay, because that could jeopardize their unemployment benefits. What you would do is start to pay them as of the date that you rehired them and going forward. All right, we received PPP from a bank we had no relationship with. Most of our bills are paid via ACH. If backup documentation is provided through our main bank, and we only transfer funds weekly from the PPP bank to cover those expenses rather than temporarily changing the established ACH. So I wouldn't change the established ACH. What I would do is I would use an Excel spreadsheet to document those expenses. And then, of course, the bank may want to see the bank statements that actually shows the expenses being transferred from one account to the other. But I wouldn't change anything on my payroll bank account. I wouldn't change anything with any ACHs. I would just track all of that stuff separately in Excel. Okay, there are employees who are not coming into the business to pick up checks if they don't use direct deposit. I am asking employers to make the employees cash the checks, especially within the 8-week cover period. So again, and this isn't clear, but from what I understand is even if you run the payroll, you cut that check, it's still going to be considered as being paid during that 8-week period. But verify with your bank. Can an employer keep the EIDL loan and the PPP loan funds? So if you receive both, if you received an advance of the EIDL loan fund, then the amount of what's forgiven for your PPP will be reduced by your EIDL loan fund, and you'll have to pretty much pay back the advance. So for instance, let's say you got an advance of EIDL of $5,000 and your PPP is $50,000, and let's say you so $5,000 for the advance, $50,000 for the PPP. Now you're only able to have $45,000 of that PPP be forgiven because it's reduced by your advance. So you'll pay the advance back at 1% instead of the original 3.75%. If you are below the 75% of the balance not forgiven, or is the entire PPP not forgiven below 75%? So it's reduced by a ratio, and more guidance is coming out on specifics to the forgiveness process. And this one I am expecting to see in that guidance released as to how they would do that. If they're going to do it similar to the way that they do the reduction in payroll, where if it's below 75% and then anything below that, I guess to a certain percentage, then it'll reduce it based on the ratio, but that's not clear right now. Okay, is the credit, is it a repayable loan? Yes. So right now, I'm looking at both as a payable loan. I'm looking at the EIDL loan as a payable loan. You have to pay that back over 30 years. And then I'm looking at the PPP as a payable loan until it's forgiven. So right now, these are all repayable loans. All right. All right. So I have more. Let's see. Can you restate which taxes should be excluded from payroll? Federal income taxes, Social Security, and Medicare, both employer and employee portions. All right. Let's see. You can roll. I think I did that one. Do you recommend that it's best practice to open a new checking account to pay or even use a reimbursement from a regular account? It is a lot of unrelated expenses. So depends on how your bank deposited that money. It may be easier and cleaner to do it out of a new bank account, but over the short 8-week period, that may cause more headache than anything. So if you are able to create a new bank account, great. If you're not, then track it in Excel. I am an S corp. Can I use personal mortgage and utilities as an expense? No. Keyword personal. As an S corp, you're not entitled to that home office deduction. Okay, is there a specific code or series of codes that we would use on our accounting software to classify the PPP loan with? So that one I answered as far as how you're going to set up the chart of accounts. But if you're talking about numbers that goes along with the chart of account numbers, I would say for any long-term liabilities, it'll start with the 2. And other income, you can put in as a 4, starting with the 4. But check with your accountant on how your chart of accounts are structured. All right, I am a self-employed and only get $87.50, not enough for 8 weeks to pay myself. My weekly was $11.50 a week. Okay, I don't think that was a question. Okay, if I had to pay one back, it would make sense to pay back and keep the EIDL loan. Oh, it'll make sense to pay back the PPP and keep the EIDL loan. You can do both the PPP and the EIDL loan, but you can't do 2 PPPs. If you receive 2 PPPs, pay one back. So the EIDL advance has to be paid back. I received $1,000 for one employee. Your EIDL alone only has to be paid back if you also received a PPP loan. So if you just received an EIDL by itself as an advance, then you will not have to pay that advance back. Okay, can I pay my staff a small hazard pay increase? Yes. Okay, on behalf of the Florida Hispanic American Chamber, PR, Hispanic Chamber, PBC, thank you for the very valuable conference and important information for all small business owners. Looking forward to receive a copy of the slides presented. Thank you. Thank you. I appreciate that. Okay, so that was the end of the questions, and we have like 3 minutes remaining. So at this time, what I would like to do is I would like to take this opportunity to acknowledge the City of Riviera Beach's Community Redevelopment Agency and then the City of Riviera Beach Commissioner, Shirley Lanier, for District 3, and thank them for the opportunity for me to be able to present this information to you guys. I will send you a little bit later this week, probably tomorrow. Keep my fingers crossed. Maybe I can do it tonight. The recording of this session along with the PDF or of the slides so that you have all those links that you can check out. So thank you guys for tuning in to this webinar. And just thank you. I thank you. Thank you for the opportunity. Enjoy your weekend and good luck with your funding.